Tonight's Tuesday, November 13th, and I'm going to go through just a few charts here tonight. This first chart is the S&P 500 cash index, and what you're looking at here is an ADX study with low prices, and ADX is an indication of trend. So when the ADX line, as indicated by this brown line here, when that's rising, the market is experiencing directional behavior or trending type of behavior. And when the line is falling, that trending behavior is declining. And when the line is below, when the ADX line is below the 20 level, it's a very range type of environment. It's a trendless environment. And the most powerful trading signals and the biggest use of the ADX is that after the ADX has been in a trendless environment for a significant period of time, and then how you measure that is by looking at this brown line. The longer that brown line is below the 20 level, that's an extended period with no trend. And once the ADX line crosses above 20, that's an indication of new trending behavior. So the textbook indication would be that when this line comes up above 20, whatever direction price is going is your direction of your new trend. So of significance today is that on the S&P 500, the ADX line closed above 20, and prices have been going down obviously here, and the ADX line has been below 20 for a month. So there's been a consolidation or a range bound type of period, and then we've obviously seen a couple big price bars breaking out of that. And interestingly also in this chart is that this red line is the 200-day moving average, and after breaking the average, the last 3 days have pushed above the average and then been rebuffed. They've been turned back and closed below the average. So it does appear right now that there is some program selling coming into the market automatically at this 200-day average, and I would guess that the market is going to continue down from this level. Now, if we do, for whatever reason, if we do see the market put in a strong move and close up, then we could rethink that. But since it's done that 3 days in a row and is closed below the average, if we see another down bar again tomorrow and a lower close below today's low, I think that opens up the possibility of some relatively sharp declines coming. And again, my estimation would be that this June low should be taken out before the end of the year if the bull market is complete in stock. So if this 2009 to 2012 bull market is done, then this low should be taken out by the end of the year, and probably a good bit before that, I would say. Likely probably this month we would see that taken out. Now, we are entering into the Thanksgiving Day time frame here in a week or so. Oftentimes there's a little bit lighter volume, but it isn't really until we get into December that a lot of times we start to see the volume dry up and volatility really decline. So that's my take on this chart, is that we may be seeing some continuation of the downward move here, and I would take heed of this ADX signal here portending a possible new downtrend with prices in the configuration that they are. And I'll briefly show a chart of this is SPY here. Now on a daily time frame, SPY is to some extent oversold. We can see an RSI study here is close to 30, which is the traditional oversold level. However, the Bollinger Bands are continuing to expand as price is hugging this lower Bollinger Band. So the longer that stays like that these bands are continuing to go down, that implies a potential for sharp downside moves here. And 2 out of the last 3 days, the market has tried to advance and then been turned back later in the day, closing near the lows. So again, when you're looking at prices, it's really the closes where the battle is won. And when you see in the mid to later day prices get turned from the morning direction, it's usually you want to pay attention to, does the market close weak or strong? And if you're in a downtrend, it's not uncommon for the early part of the day to see the price strength and then to have it have selling coming in the afternoon and push prices lower. And that's what we're seeing here, and that's pretty indicative of downtrend type of behavior. So taking all that together, I think that I do expect the market to continue lower. These green lines on this chart represent some unfilled gaps in the market. So we have an unfilled gap from here and an unfilled gap from right here. And then we also have an unfilled gap down here. So those would be some potential chart support levels. We also have some clusters of swing lows in this level around 132 to 134 here. So if the market does come down and clean out these gaps, we could watch possibly for a reversal type of bar after it takes out one of these lows. But again, my take is that this will probably come down and take out that June low before we see any major type of reversal attempt there. So that's all for tonight, just a quick update there, and I'll update again probably this weekend.